Welcome back to the Deep Dive. Today, we're unpacking a really fascinating contradiction in the aerospace industry. We're looking at Starfighter Space, Inc., that's ticker FJET. And what's so interesting is that they're using this small, very specialized fleet of supersonic jets designed way back in the 1950s to compete in the most cutting-edge markets. We're talking responsive launch, defense R&D, you name it. It's a remarkable bet on, well, on obsolescence. So our mission today is to give you a complete, unbiased analysis. We have gone deep into their regulatory filings, their financial reports, all the strategic documents. We want to understand exactly how this business model is supposed to work, where the strengths are, and of course, what risks you're looking at when you trade a Cold War relic for a modern space platform.
And before we get into any of that, we have to be absolutely crystal clear about the information we're sharing.
The disclaimer.
Exactly. This is not investment advice.
Yeah.
We are analysts, not advisors. Everything we're about to say comes directly from public regulatory documents, SEC filings, their Regulation A offering, Form 8K reports.
And that data isn't always perfect.
It's not. It's subject to change. Accuracy is not guaranteed, and you absolutely must conduct your own research before making any decisions. This deep dive is purely analytical, purely educational.
All right, so FJET just listed on the NYSE American. That was in December of 2025. And at the time of our analysis, it was valued at around, what, $877 million?
Yeah, just under 880 million. It's a serious market cap built on a very serious promise.
So let's unpack that. How does a Cold War relic become a modern space platform? What is the core asset here that justifies that valuation?
It all comes down to one aircraft, the Lockheed F-104 Starfighter.
Ah, the missile with a man in it.
That's the one, designed by Kelly Johnson's legendary Skunk Works team.
Yeah.
And it wasn't built for dogfights or long ranges. It was built purely for speed and climb performance.
Just to get very high, very fast.
Precisely. It was designed to reach and sustain Mach 2 flight.
And crucially, FJET doesn't just have one or two of these things sitting in a museum.
No, they operate the world's only commercial fleet of flight-ready F-104s. There are 7 of them. And their primary operational hub is the NASA Kennedy Space Center.
KSC, so they're right in the heart of the action.
Exactly. And this fleet, it's a highly differentiated platform. I mean, its ability to routinely hit Mach 2 at altitudes up to 60,000 feet gives them a capability that's really sought after for specific research and launch tasks.
Kind of like how NASA and the military used them for the same stuff decades ago.
It's the exact same principle, just applied to the modern commercial market.
Okay, let's tie that unique capability to the balance sheet. Starfighter Space is pursuing what they call a dual revenue strategy.
Right. They want to diversify their income streams. They can't be entirely reliant on the launch business, which, can be super cyclical and prone to delays.
So what's pillar number one?
Their primary revenue driver is what they call responsive launch services, or Star Launch.
Star Launch.
The core idea is to use the F-104 as a kind of reusable first stage for a rocket.
So it's basically giving the rocket a massive head start.
Precisely. The F-104 carries their Star Launch rocket, either the I or the TIE family, up to about 45,000 feet, gets it moving at Mach 2.
And then?
At that altitude and speed, the rocket just separates and ignites its own engines, boosting the payload the rest of the way to orbit. This air launch approach, it dramatically reduces the energy needed from the rocket itself.
Which should mean a higher cadence and a lower cost per launch, at least for their specific niche.
That's the goal.
And what is that niche exactly? Who are they targeting?
It's focused squarely on the small satellite segment. We're talking nano and picosats.
The tiny ones.
Yeah, the tiniest. They're aiming to access this big backlog of tiny payloads. The company estimates it's around 2,000.
Yeah.
That are just waiting for a ride, either for specific orbits or for, rapid response missions.
Okay, that's the primary stream. What about the secondary one?
That really leverages the F-104's unique performance. It's positioned as a high-speed development platform. Think defense R&D, payload testing, national security stuff.
Right. The U.S. government is very focused on space superiority right now.
And that means there's a lot of demand for platforms that can test components in real-world supersonic conditions, even if you're not getting up to, true hypersonic speeds.
Which brings up a critical question. Is this just an idea on a PowerPoint somewhere, or is the hardware actually, progressing?
Oh, the R&D is well into the execution phase. The design for the Star Launch iTest article is complete. They did that in partnership with GE Aerospace and Innoveering.
So they have serious partners.
Very serious. They've used modern engineering, digitally scanned the whole aircraft, and they run over 100 simulations of the rocket separation at supersonic speeds.
So they've done more than just digital modeling.
Yeah, they've moved past that. They've done successful rocket drops in wind tunnels at Mach 0.8 and Mach 1.3.
Okay, so a proven design, successful simulations, what's the timeline?
The ultimate target they've put in their filings is the first commercial launch by the end of 2025.
But there's a catch.
A big one. It's explicitly subject to securing enough funding and, maybe more importantly, getting all the necessary regulatory approvals.
That sets the stage perfectly. So we have the business model. Now let's talk about the moat. If the whole business rests on 7 old jets, what stops a competitor with deep pockets from just buying up a similar fleet and copying the idea?
That's the fascinating part. Their competitive advantage, their moat, is built on these structural barriers that are almost impossible to replicate quickly.
Okay, like what?
The first one is obvious. Physical uniqueness. They have the only commercial fleet that can do sustained Mach 2 flight, period.
So if you're a defense client and you need that specific test profile,
You have to go to them. They're the sole source for certain real-world high-speed wind tunnel testing. They can offer data no one else can sell you.
but access is also key, right?
Yeah.
Especially with military clients.
Absolutely.
Yeah.
Their location at NASA's Kennedy Space Center is paramount. That, plus their active partnerships with the Department of Defense, it grants them priority in these huge stretches of restricted airspace.
So they get to cut the line, basically.
They get to bypass a ton of the friction. A competitor would have to negotiate with the FAA, compete with commercial air traffic. FJT just doesn't have that problem.
That's a big deal. But those relationships can be fragile. What protects that? That's where the third part of their moat comes in, right? The know-how.
Exactly. It's what the filings explicitly call tribal knowledge. Operating an F-104 is incredibly complex. It's not some modern fly-by-wire jet.
How complex are we talking? Give us a number that illustrates it.
Okay, historically, the F-104 required 30 to 45 maintenance hours for every single flight hour.
30 to 45 hours for 1 hour in the air.
Yes, it's an enormous amount of work. The specialized know-how to maintain the J79 engine, the complex hydraulics, the airframe, it's all concentrated within FJET's technical staff.
It's a huge barrier to entry.
A massive one. You couldn't just buy the jets. You'd have to find and hire the handful of people on the planet who still know how to keep them flying.
So it's like trying to maintain a vintage Ferrari where only 3 mechanics in the world have the parts and the knowledge.
That's a perfect analogy.
Yeah.
And it extends to the leadership. The CEO, Rick Svetkov, is a former U.S. Navy pilot. You also have people like Jeffrey Hickman, former F-16 instructor with thousands of flight hours, but who also has deep financial experience from places like Citi and McKinsey.
That combination is key. You need the pilot and the banker in the same room.
You do. You need high operational competency to manage the technical risk and financial rigor to manage the business risk.
Okay, this sounds like a high-risk, high-reward venture. Let's pivot to the financials, because those high-maintenance hours, all that R&D, that has to show up on the books.
And it does. Starfighters is firmly in the pre-revenue development stage, and that means they're operating at a substantial loss.
What are the numbers?
The documents show a net loss of $7.9 million in 2024. That's up from $4.68 million in losses in 2023. And critically, through the first 9 months of 2025, they generated $0 in revenue.
Zero.
Zero. The money's being burned on R&D for Star Launch and, as we said, the incredibly high maintenance for that F-104 fleet.
When a company is burning cash that fast, the auditors usually have something to say about it.
They absolutely do. The company's auditors included an explicit paragraph about substantial doubt that FJET can continue as a going concern.
That's a pretty big red flag.
It's standard language for a pre-revenue company, to be fair, but it really emphasizes that their whole future depends on 2 things: successfully raising more money and executing their business plan on time.
So where is the money coming from right now?
It's been funded by issuing common stock and convertible debt. They brought in about $6.5 million in the first half of 2025 through financing activities.
But they also have significant debt. I saw about $7 million in secured convertible debentures. What does that actually mean?
It means they had loans backed by company assets. But, and this is important, they were structured to convert into common stock automatically when the company went public in December 2025.
So their lenders became shareholders.
Exactly. It's a common way to fund these ventures, but it does mean those new shares were created, which can dilute the value for existing stockholders.
Okay, so the foundation is built on R&D costs and converted debt. How does that position them against the competition?
Well, they face severe competition on 2 fronts, and it's all driven by the physical limits of the F-104.
Huh.
First, in the launch market, their payload capacity is so small, it limits them just to those nano and picosats.
The smallest end of the market. And we know who owns that price point.
SpaceX.
Hmm?
Their transporter missions dictate prices below $5,000 per kilogram. FJET just cannot physically compete with that.
So they have to compete on something else.
It has to be purely on rapid reaction time, specific orbits, and the security needs of defense clients who might pay a huge premium for that responsiveness. It's their only path.
That's a narrow path. What about the second limitation on the R&D side? You mentioned the F-104 only hits Mach 2.2.
And this is the critical gap. True hypersonic testing, where all the big defense money is going, that starts at Mach 5.
And there are competitors who can do that.
There are. Companies like Stratolaunch with their Talon A or Rocket Lab with their HASTE platform, they're offering Mach 5 plus test capacity.
So if Mach 5 is the ticket to the big show, is FJET just stuck picking up the scraps?
I mean, they're confined to conducting preliminary lower supersonic tests. While that's necessary for some components, it massively restricts their total addressable market in the most lucrative part of the defense sector.
So let's crystallize these vulnerabilities. The filings point to three major risks: execution, expansion, and management control. Let's start with execution.
Execution is everything. The entire Star Launch program hinges on them finishing their R&D and critically securing their FAA launch license. That means Part 450 compliance.
And what is Part 450 for anyone who doesn't know?
It's the FAA's modernized regulations for launch and reentry. It is incredibly complex. It covers everything from environmental impact to safety systems. For a company air launching supersonic rockets near KSC, getting that license is a huge, expensive hurdle.
A delay there could be catastrophic for their timeline.
Absolutely. And the risk isn't just with the current jets. Their growth plans rely on capital they haven't even secured yet.
Right, the Platform 2 aircraft.
Exactly. They plan to acquire the F-4 Phantom Sakhalin, another decades-old, labor-intensive jet. That purchase and their whole expansion to a second site in Midland, Texas. It's all contingent on state government funding that the filings say is not formally secured.
So if that funding falls through.
Their scaling plan is immediately put on hold or canceled.
Okay, finally, the internal vulnerability management concentration.
Yeah, the CEO, Rick Svetkov, retains substantial voting power. It's estimated around 44.6% after the offering.
Which means he has a huge amount of control.
It limits the ability of other stockholders to influence corporate strategy. And the company remains incredibly dependent on him, not just for his vision, but for that key operational knowledge we talked about.
So if we pull back and summarize the core tension here, you have this uniquely positioned company with a fantastic specialized legacy asset, the Mach 2 Starfighter.
Right. It gives them niche capabilities in testing and launch, and it's protected by their regulatory access and that travel knowledge. However, the documents paint a very clear picture of a high-burn R&D venture competing in capital-intensive markets where its rivals are either dramatically cheaper, like SpaceX, or demonstrably faster, hitting Mach 5 plus.
So the successful conversion of their unique history into sustained high-volume commercial revenue, that's the big unknown.
That is the entire ballgame. That's the critical unproven factor they have to overcome to escape that going concern warning from the auditors.
So Starfighter Space is betting that speed and responsiveness in a very, very specific niche market can outweigh the massive price advantages and the superior speed of the new space heavyweights. It's a huge risk. They're leveraging a tiny pool of tribal knowledge against the global scale of modern aerospace.
Can a rocket with a man in it truly stay relevant against the massive scale and capital of today's space industry?
That's the ultimate deep dive question for you to consider as you track this story.
Thank you for joining us for this deep dive. We'll catch you next time.